Okay. Okay, good morning, everybody. My name is Alan Zarenberg. I'm the president of the California Chamber of Commerce, and today we're really honored to have the director of California's Department of Finance, Keely Bosler, who is going to give us all a preview of the governor's proposed budget for 21-22. And before I introduce Keely here in a second, I think all of you know or are familiar with the Discover commercial where every Alicia Silverstone, Jack Black, few people say no, no, no. Well, for all of you, ladies and gentlemen, if there's one mantra that comes from the California Department of Finance, historically, it's no when people want to spend money. So I think we all should appreciate that, but it is important that the governor's blueprint for how they want to run the state, how they want to spend the resources is included in the budget. And Keely Martin Bosler was appointed Director of Finance originally by Jerry Brown and then reappointed by Gavin Newsom. And she has 20 years experience with the Capitol, with the Legislative Analyst Office, and the California Department of Finance, and is truly an expert on state finances, revenues, and how you spend the money. And she's a graduate has her economics master's degree from Cornell and is a graduate right here of Chico State University. So Keely, I'm going to turn it over to you, and thank you so much for being here. And we look forward to your presentation.
Thank you, Alan. Thank you for that kind introduction. And it's a pleasure to be here today to give you the highlights of the governor's 21-22 budget. We really do continue to live in such extraordinary and uncertain times. And I'm partly happy to report that when we put our revenue estimate and our economic forecast together in April at the very beginning of this pandemic, there was a lot of extreme uncertainty, and many of the assumptions that we made and forecasts that we made at that time did not end up being coming to light exactly as we predicted. And it was an incredibly uncertain time then, and it really continues to be an uncertain time. I can go ahead and go to the second slide in my slide deck if that. Thank you. So since we put our last forecast together back in April of 2020, revenues have dramatically improved. And so the growth rate is about 22% over what was assumed in the 2020 Budget Act. And I'll go into why that is in a slide or so. But the GDP for California took a historic drop, and that's just not GDP for the California, but the US as well, 31.5% drop in Q2. And now we are about back to 2019 levels, which is pretty extraordinary and shows the resilience and also the ingenuity that's happening out in the private sector to figure out new ways to do business. But an 8.2% unemployment rate remains. We still have a lot of people dropping out of the workforce. And over 4 million Californians that still receive some form of UI benefits. I'm especially concerned looking at December's jobs report for the nation, how there was, again, a job loss, and looking at what California's will be earlier or later this month. But the bottom line is we still have 1.4 million fewer Californians employed than we did back in February pre-pandemic. And obviously we are in the depths of this pandemic right now with ICU rates, ICU capacity at effectively zero, except for in the northern part of the state, and very high rate of spread, especially in Southern California and the San Joaquin Valley. So we continue the work of this administration is first and foremost in the response to the pandemic. Every day there's a lot of work going on to assist and support our hospitals in their surge efforts, as well as now a tremendous focus on vaccinations and making sure that we have the networks and the capacity to move through vaccinating the public at a much quicker rate than any vaccination programs in recent history. So that remains a primary focus of this budget, and I'll go into a little more detail on that in a minute. You can go ahead and move to the next slide. This is just a little bit of a picture of this dramatic dive that our economic activity experienced during the pandemic, but we are very glad to see that we are on the recovery, and the primary focus that you will see throughout this budget is really making sure that we have the foundation set to accelerate out of this pandemic and recover our economic situation and the jobs more quickly than we otherwise would. Okay, go ahead and go to the next slide. A few things I just want to talk about the revenues a little bit. You know, why is it so much better? First thing is that the economic downturn was less severe than we expected, and that was really buoyed by the record federal aid that was provided last year. One thing I will just note is that we put this economic and revenue forecast together prior to the actions by Congress at the very end of 2020, and so that's not reflected in our numbers. We do expect a little over $105 billion from that recent act that will flow into the state. Some of that through the PPP program, and a lot of that going directly to individuals through UI and those direct assistance payments. But there's also additional support for contact tracing and testing and vaccination, as well as our education systems, both K-12 and higher ed, and some transportation money as well. So that will all be very helpful. We'll be working with the legislature on the best way to get that money out into the economy. Some of it will go directly, does not go through the state. The other thing that we did not get quite right was just how unequal the spread of wage losses would be. You know, high wage workers have generally been able to transition through technology and other supports to work at home, whereas low wage workers have been more disproportionately impacted. Those are a lot of the jobs in our tourism sector, our service sectors that have been lost during the pandemic. And then finally, we did not predict that the stock market would continue to go up and up as it has. This budget reflects record capital gains, which for those of you watching along on the state's budget know that capital gains is an incredibly volatile revenue source in our tax base. And this year we have 185 billion built in. That's 18.5 billion in tax revenue, and so that's the highest ever. A significant portion of that is going into the rainy day fund, which is what we call our budget stabilization account, or Prop 2. Two sources of money go into that account via the Constitution: 1.5% of general fund revenues, and then all of the capital gains in excess of 8% of general fund revenues also goes into the rainy day fund. So those monies are shaved off and put into the account to try and mitigate the volatility of those revenues. So go ahead and move to the next slide. So just a little bit about the budget kind of structure. Total expenditures, that's general fund and special fund, is around 227 billion. We have 165 billion just on the general fund. The total reserves are 22 billion. So that's a record amount, and it's an extraordinary amount. The majority of those reserves are in the rainy day fund. And so there are specific rules around when the money can be withdrawn from those reserves. And last year we did take out a little over $7 billion in order to help balance the state's budget last year. We're putting in more than that amount in through two different mechanisms. We have $3 billion for the budget year, and then there's additional monies that we call true ups that are for the prior year and for the current year that we're in, which is 2021. We estimate about a $15 billion surplus, and that is a measure of how much discretionary general fund money there is. And a portion of that is in a reserve called the Special Fund for Economic Uncertainties. That is our operating reserve. It's the reserve that we use to fight fires and to address COVID-19 expenditures. And then a vast majority of that, the remaining surplus is dedicated to one-time expenditures, and mainly in support of people right now, the immediate needs of people and small businesses, and to lay the foundation for an economic recovery. We also continue to pay down our state retirement liabilities, again, through our Proposition 2 rainy day fund. We also have a provision that pays down additional debt. All of the debts that are eligible to be repaid are all related to our long-term retirement liabilities. And so we're able to make progress with $3 billion proposed this year, and another $6.5 billion over the next 3 years is what we currently forecast. We've been talking for the last 2 years about some program suspensions as we really work hard to maintain that structural balance, which is really important for the long-term stability of the state. And that's where revenues are exceeding expenditures. While we have a surplus in the budget year, we are currently projecting that the next 3 years we will have growing deficits. So while we have additional money now, that does not mean we have additional money to support ongoing program expansions. And so these programs that have been in law suspended, many of them are newer expansions that were made over the last 2 years. Some of them are rates to our healthcare providers. But because of the additional money we have, we are able to delay those suspended programs for a year. So they are still on the books, that we will be able to legally suspend those programs if needed to balance our books, but they are not being proposed for reductions in the budget year. You can go ahead and move on to the next slide. That's a little graphical depiction of what I just was talking about in terms of we've seen surpluses over the last 2 years, and we project one coming into this next year, but we do project deficits. So expenditures are exceeding revenues in the future. And so that will continue to be something that the state will have to grapple with and address. A lot of uncertainty, again, in our estimates, given how much uncertainty there is in the economy. What is the federal response going to be? Are there going to be additional bills? What are they going to do for the economy? And really, will the economic shock that we had at the beginning of the pandemic, and that continues with this resurgence of cases, will that really start to spread beyond and to more sectors, and what will happen there? So there's a lot of uncertainty, and we will continue to update the numbers as best as we can. Next time will be in May. So I'll go into a little bit about how the governor allocates the resources. Again, I mean, we have a very strong fiscal foundation, and that's really from years of building reserves and paying down debts and really focusing on the structural balanced budgets over the long term. And this has really enabled us to protect programs and then also respond immediately to the pandemic. Can you go to the next slide? So that this is just a little bit about the how much money the state currently has built into the budget, really just to directly respond to the pandemic. Over $4 billion. This will not all end up being on the state's general fund. We anticipate a large portion of this money will be offset by payments from the federal government through FEMA. The Federal Emergency Management Agency. They're nested with us in the emergency response, but we're spending additional on testing, supporting vulnerable populations, contact tracing, and then finally vaccinations. And so I just want to say a little bit, because there's been a lot of questions from the press and others about what's in the budget on vaccines. The bottom line is this is an estimate of the costs that we think that we will incur to expedite the vaccinations. This is a very rapidly changing landscape as we identify gaps in different county public health distribution systems. As the governor said on Monday, all hands on deck approach in terms of finding and mobilizing additional vaccinators and also vaccination places that you will be seeing over the coming weeks. Some very large clinics being set up at places like Cal Expo and other places as we look to really do a mass vaccination at a scale that we have not seen in recent history. And so this is obviously incredibly important for our economy and our ability to get back to moving around more freely and to reopening schools and many other things that are important to getting back to life pre-pandemic. However, I think many of us see that a lot of changes will have occurred even after the pandemic is gone. Go ahead and move to the next slide. So the governor is asking for some things that we call early actions. Normally we propose a budget and we do a lot of debating for the first part of the year and then finally come together on a final budget package in June. This year is different. The governor has proposed some immediate actions. These are actions that we would like to see the legislature take in the next couple of weeks. First thing is obviously prioritizing in-person instruction at our schools, getting more of our schools reopened safely. The second thing is a historic Golden State stimulus, providing additional money to those that need it the most. We are basing our tax refunds, we're targeting them to those that earned the earned income tax credit last year in 2019. We have that data. There is some fidelity of the tax system and some controls that we are able to use and get that money out quickly. And then obviously we are in the midst of a small business grant program working with a vendor, Lendistry. They have been taking applications for the first 500 million that was allocated in the last day of November, I believe. And we're working to get that out very soon. We're adding another 575 million to help small businesses weather these historic times, really trying to marry up with what the federal government is doing as well. We also have some legislation to allow state departments to waive fees for bars and restaurants and those licensees under barbering and cosmetology that have been significantly impacted by public health restrictions and their ability to be open and serve their customers. And then finally, we're continuing to work with the legislature to extend the eviction moratorium, and the federal legislation just recently set aside $2.6 billion to help renters and small landlords. And so we're also working to get that money out onto the street as well. So those are what we are calling immediate budget actions that we want the legislature to take action in the early part in the next couple of weeks. is our goal. You can go ahead and move on to the next one. Again, a major focus of this budget is jobs, job creation, and how do we accelerate the recovery for the state, and also a recovery that is both equitable and broad-based. And that's not just with income, but also geographically, looking at different parts of the state that are often slower to come back after recessions, and looking at what targeted investments the state can do to help in those regions as well. The first thing is that we are building upon a proven program, the Cal Competes program. It's a tax credit program. Many of you may be familiar with it. It has been oversubscribed in recent years, and we're proposing to add $430 million, including within that is a $250 million grant program. So this would be essentially a refundable tax credit. And that is going to be focused on job creation, especially in underserved areas of the state. We also have a suite of additional tax credits and extending the hiring credit that we established last summer, and some additional grants and micro grants for very small businesses, entrepreneurs, especially among minority communities and communities that are traditionally have been disproportionately impacted by the pandemic. And then we are also continuing to add to our suite of loan programs at the Small Business Office at GoBiz, or the Infrastructure Bank, and adding to those programs as well. And then also one additional tax exclusion related to alternative energy at CAFTA. This is a direct sales tax exclusion on investments in climate change technologies that are clearly going to be a huge growth area for the state as we continue to be a leader in the world on climate change and the technologies that are needed to address that very large issue. Moving on to the next slide. In addition to job creation, obviously the worker side of things, workforce development is a real focus of this budget, including $250 million that we plan on really creating better linkages between our higher education institutions and employers. So this is something we want to work with this group of people on this call on, really trying to make that transition from higher education to the workforce seamless, and making sure that we are training and have the skills that are needed in the workforce. We have additional apprenticeship opportunities, including some through the community colleges, but also some through our workforce development board. You can go ahead and move on to the next slide. And then in terms of additional job creation, infrastructure is another area of emphasis. We've got $500 million for these infill infrastructure grants to get more housing built. The housing crisis, unfortunately, has not gotten any better through this crisis. And we continue to need to build more housing up and down the state. The governor has a suite of proposals to continue to make progress in this area. This general fund money is going to be used to grant to local governments to make the investments in the sidewalks and the street lighting and the sewer plants and all of the infrastructure that's needed that often local governments don't have the upfront money to invest in. We also have $300 million for different deferred maintenance issues across the state's infrastructure. These obviously also create construction jobs as we bid all of that work for the most part out to the private sector. Then we also have this proposal on zero emission vehicles and really trying to super size and expand what we are doing on zero emission vehicles. And that really requires people to feel comfortable adopting that technology. 500 million is from various special funds for vehicles. And then we have a $1 billion securitization proposal. So this is not money from the general fund, but this is actually securitizing an existing fee on vehicles that's currently used for zero emission vehicles, but to accelerate that money through issuing a bond to get more of the infrastructure built more quickly to expedite the adoption of zero emission vehicles. And then finally, we have a sizable investment for a suite of different programs to support our agricultural industry and to advance the state's climate resilience. So this is everything from grants for groundwater management to water efficiency programs, in addition to integrated pest management to help with the transition away from toxic pesticides. You can go ahead and move to the next slide. So in addition to job creation, which is obviously incredibly important to our future, education is clearly an incredibly foundational part of what government provides. And it's a really strange time, frankly, for education, with a large portion of the state being in remote learning since March. Thankfully, with the increased revenues, we have the highest level ever for Proposition 98 funding. This is going to allow additional funding through the local control funding formula to be completely funded, and also to pay down the significant deferrals that we did last year. So what education deferrals are is essentially shifting payments from one fiscal year to the next. And last year, in order to bring the guarantee down to its constitutional level, we did a historically large number of deferrals in the education budget. We were able to unwind most of those. We have still 3.7 billion remaining, but that is really important to making sure that the schools have a strong fiscal foundation to do all of the things that they need to deliver educational programs to students, and especially address the pandemic impacts on students. We also have some additional, and this is quite extraordinary. We have non-Proposition 98 general fund of about 3.4 billion that we are also dedicating to schools. This includes a supplemental payment of 2.3 billion and an additional 1.1 billion to pay the school district's retirement contribution in the budget year. And then finally, another part of our Proposition 2 rainy day fund is the school rainy day fund, which is another smaller built-in mechanism against the volatility of our revenues. And so there will be 3 billion that's deposited in that school rainy day fund. You can move on to the next slide. So those were sort of the basics of our school spending, but just a little bit about the safe reopening of schools. This is obviously a primary focus of the governors right now, is to reopen schools safely. We have a $2 billion proposal that will be linked to schools that are able to reopen safely for in-person instruction for the youngest students. TK to second grade is the focus, but also a focus on special education, which have been able to be open for in-person since the summer, and many have, but some have not. But we want more of those students back in person safely, and then through the spring, hoping to return more students, especially focusing on elementary schools, as school districts are able to do that. We also have 4.6 billion that we're asking for an early action on. The reason why we want to do this early is we really want to give school districts the fiscal incentives to put together programs that especially address the pandemic's impacts on learning. I know I've talked to a lot of teachers, and for many of the students that are lower in their abilities for the class, they often just hide behind the computer screen. And so really getting at making sure that kids are getting to the reading level that they need to be successful in the rest of their elementary school and the rest of their academic career, and also really focusing on high school students that may not be able to graduate because they haven't finished their coursework. You know, there's going to need to be some targeted interventions to address all of the impacts that have occurred. And that could include summer school or extending the school year. And those are all things that we want school districts to be considering to really, again, address the impacts of the pandemic quickly, so that we are not dealing with years of students being behind. A significant focus on teacher training. They are at the root of everything. Teachers in the classroom are who are making the learning happen. So that is a huge focus, which it has been the last 2 years as well. And then student mental health and well-being. And I think we all know that in our own households and beyond, mental health is a big, has really taken a hit with the pandemic, whether it's isolation or just fear of the unknown. We have a significant new proposal through the state's Medi-Cal system to help provide more preventative services to school-age children. But we also have some additional money directly for school districts to support social emotional learning and other training to help our school employees with the mental health issues that they will be facing as students do return back to school. Early education is something the governor is passionate about. We have about a $500 million investment in expanding early transitional kindergarten. So what this means is we have a $250 million block grant within the guarantee that would be available to those districts that are serving more than just the transitional kindergarten age children, which are currently the children born between September 1 and December 2nd, but serving more of those students beyond that age span, and getting more of those kids into school earlier. We also have some additional money for infrastructure around those facilities as well. And then finally, $300 million for special education. I'm going to go ahead and go to the next slide. So higher education, obviously, I don't have to tell this group how important this is to our economy, and the budget makes a major investment in the higher education system, not just the community colleges, but also our UC and CSU system. Both of them have 3% base increases and then a significant investment in one-time resources. And both segments, we plan to ask them to maintain their current resident and undergrad tuition and fees, and also to continue to make progress on reducing equity gaps. But the third thing that didn't end up on this slide, but I think is really relevant, is we really want all the segments to make a concerted effort to improve their linkages to workforce and jobs, so that we have students moving through their higher education career and right into careers. And that's going to require a lot of outreach and conversations with many of you. But that is the ultimate goal of higher education, is to get people into careers with skills, and that will continue to be the focus. You can go ahead and move to the next slide. Obviously, from day one, homelessness has been a focus of Governor Newsom. We this year are really focusing not just on building on the successes that we've had throughout the pandemic in the low cost acquisition of motels around the state to convert them into long-term housing. We have $750 million to continue those partnerships with local governments to do that. But we are also making other targeted investments to create a continuum of the facilities that are needed. And obviously the occurrence of mental illness and substance use disorder with our homeless population is significant. And there has been a long-term need for different types of community care treatment resources for those individuals. We have $750 million dedicated to developing those facilities with local governments and really provide another place that's not jail for individuals to be brought to and stabilized and then, hopefully transition to a more stable housing placement. We're also really focused on seniors. That's been a big focus of our efforts through this effort we call Home Key to house vulnerable populations. Seniors, there's a lot of seniors that have very vulnerable housing situations, and we have these facilities that we call adult residential care for the elderly. They are a important network of low cost housing for our seniors. And it's a network that has been frayed over the years, even prior to the pandemic. And we are investing additional money, again, in partnership with local governments in order to purchase and or rehabilitate infrastructure that bolsters that important source of housing. They're usually 6-bed facilities where these low-income seniors live. I want to talk a little bit about healthcare, and then I do want to get to questions because I know you all will have some questions. You can move to the next slide. The governor's continued focus on healthcare and really trying to forge a path to coverage of all people in California. We've made a lot of progress in California since the Affordable Care Act in that regard. And then by further expanding the subsidies at Covered California. But we are continuing to try and really make progress on what we call the high users in Medi-Cal. These are very, very complex individuals that often have a lot of different health issues, and often also have other complicating conditions, including living on the streets, that make it more difficult for them to manage their chronic health problems. We call this effort CalAIM. It's much more than just the social determinants of health, like housing and leveraging Medi-Cal and the federal government programs to support many of those important parts of delivering healthcare. But it also really is transforming the delivery system and making our system more uniform across the state. It's a very large effort, including changes to behavioral health delivery system, which again is part of the Affordable Care Act's promise, is really better integrating behavioral health with physical health. And so it's a very comprehensive proposal, and it's one of the larger ones that we do make investments in. But the idea is that over time, we were going to be reducing the per unit costs of this system by making it more efficient over time. The next thing we have is many of you may have heard of a population we call incompetent to stand trial. These are individuals that are often waiting placement in our county jails, waiting for placement in our state hospitals. It's an issue we've been dealing with for many years. The list of people waiting for a slot in our state hospitals continues to grow. And so we are looking to work with a small number of counties to do some demonstration pilots to streamline and serve those individuals in their communities. Many of these individuals have the most serious mental illnesses, and we want to make sure that we're building community-based services that can support these individuals with and ultimately reduce crime and reduce recidivism among this population. Following up on the first issue I talked about on healthcare, on reducing costs, we are creating an Office of Healthcare Affordability, and the primary focus will be increasing price transparency, but also reducing costs and increasing value of our healthcare system. We're also going to be looking to partner with the new administration around Medicare and looking at new partnerships to leverage the Medicare benefits with our state Medi-Cal's system to provide more long-term care and supports to more people in the state, not just those that are eligible for Medi-Cal. I can go ahead and move to the last one of my last slides here. And then finally, I just want to touch briefly on the climate and environmental protection aspects of the budget. It feels a little weird to wait until slide 17 here to talk about wildfires, given the severe impact that wildfires had on the state in 2020. It was really such an extraordinary year for so many reasons. This budget makes additional investments to not just fight those fires more effectively. We have additional fire crews at CAL FIRE, but also at the Conservation Corps as well. And many of those crews, we want to have a dual purpose of not just fighting the fires, but also in the off season, which has gotten very, very short in recent years, to do more forest health projects, to do more committed to more forest thinning, prescribed fire, all of the tools in the toolbox. We have an investment at our new Climate Catalyst Fund in providing low interest loans to projects that will make commercial use of the waste products coming off of those treated forest lands. This is a $1 billion package of wildfire and forest resiliency measures that really has a very wide variety of approaches to make progress in this area and not repeat what happened in 2020, which was really quite devastating. Another one that I want to point out is toxic site cleanup. This is an issue that has really come into the forefront at the Exide battery plant in Southern California. But that's just one site. There are many abandoned or orphan sites around the state, many of them near vulnerable communities that are being disproportionately impacted from those toxic sites. We make a one-time investment of $300 million, and we are also continuing to pursue changes. This says 331 because it's got the 331 for additional cleanup specifically at Exide. But we are also continuing to pursue changes to not just the governance at the Toxic Substances Control Agency, but also fee reform in order to address the long-term sustainability of those programs that currently have been supported by the general fund from year to year. And then finally, the last thing I want to focus on is we are proposing the first in the nation, from what our research shows, a tiered mill assessment on pesticides based on a risk-based tiered assessment. And the idea behind this is really to focus in on those that have the most impacts on health and try and phase out the use of those. And again, in addition to the increased mill fee, we would put a significant investment in general fund in the first few years to help with the transition for the industry, recognizing that for many of these crops, there really needs to be more technological advancements, and we want to support that, and including supporting the whole industry around pesticides to help them transition to more regenerative practices and different practices that don't rely on those chemicals. So you can move to the last slide and I will end it there. Sorry for the long presentation. I'm not as succinct this morning for some reason. But just again, the budget prioritizes an equitable and broad-based recovery. We want targeted budget action early this year, not just the immediate action. We also have many other of the business tax incentives and workforce programs slated for early action as well with the legislature, including some fire investments that we want to get started on before the next fire season starts. Those will all be important to get started so we do not waste any time. Hoping, fingers crossed, we have a much more robustly vaccinated population by the summer, and that we are getting back to more normal pace soon. Of course, it's hard to imagine, all the ways that we are going to have changed after this pandemic, and so there's a lot, and there's still a lot to get through in the next several months. We are pretty clear that as long as the public health restrictions and the pandemic is here, we're going to need additional action by the federal government to keep the stability going on our economy. The actions that they took last year and in late December have been incredibly important to support people. The amount of money that is going out through the UI system and through the direct payments is just not something that the state and the small, of course, the PPP program is just not something that the state has the resources, even with emptying out all of the reserves, can even come close to supporting. So that action has been critical, along with other actions that the Federal Reserve has taken, and mortgage forbearance, and many other actions that are stabilizers that help us to get through this with fewer bankruptcies, fewer people ending up homeless, and positioning the state to be able to recover more quickly. So I will end it there, and just want to say thank you for giving me the opportunity to present what we see from our seats, and just really appreciate all of the ingenuity. I know this has been an incredibly difficult time for our business community, and my heart goes out to all of those small businesses. I come from entrepreneurs and small business owners myself, and I know the sleepless nights that have ensued over this last year as you figure out how to make it work, and that's incredibly difficult. And so we want to help, and we also want to hear from you about what other pain points there are.
So Keely, thank you so much. And there's a lot to cover there, and you've been talking for a long time. So we asked for a few questions ahead of time. So I'm going to try and consolidate those, and not surprising, a lot of people were curious about taxes. So, but maybe you could put this in a little bit in perspective of what you've just gone over. You talked about how the budget takes the surplus and you try to spend it on one-time programs. For those people who are worried about taxes, this is tax avoidance for the future years. Could you talk a little bit about how much pressure you will get from the legislature to turn these one-time programs into ongoing programs, and this is a way to avoid the need for taxes in the future?
Right. So, I mean, one of the ways that we guard against the instability. And again, I think I go back to that chart where I show surpluses and deficits. The deficits we are still projecting, so that those reserves are going to be incredibly important to being able to maintain the programs that we currently have. So from my perspective, we can't afford additional ongoing spending at all. That's partly a function of the way our budget works with the Proposition 98 guarantee, where 38% of general fund revenues are dedicated to that every year when we're in this test one environment, which we have been. The other thing that I was not on my slide that I wanted to mention is that we are actually, for the first time since 1986, we are also meeting the state appropriations limit. And so this is something that people probably are not paying a lot of attention to. It's been on the books in the Constitution since 1979. And it is a formula that governs how much the state and local governments can spend. It has not been a factor for many, many years. But this year, because of the extraordinary emergency expenditures, we are above that limit in the current year. And in 1920 and 2021, it only is in effect if you're over in 2 years. We are over by current estimates by about 100 million. Well, that's not a lot in the scheme of things. Half would go to tax refunds and half would go to schools. We will make a final determination about that in May. But certainly reserves in a state like this with a very progressive income tax structure and very volatile revenues, those reserves are really critical to helping us have some stability through whatever comes our way.
So when the legislature wants to spend your money on ongoing programs, these people should stand up for that, say, we want the governor's budget. It's that keeps the surplus spent on one-time programs. Right. So right. That's good for really everybody to know.
And there's a lot of need out there right now, and that's our focus, not just the small businesses, but people. And that's, we are able to do that because of all of the work to keep the budget balanced, to build those reserves, to pay down debts. We are able to be in a position to respond to the emergency, but that does not mean expanding ongoing programs that we can't support on our current tax base.
So to that, one of the questions, of course, is there was a lot of discussion about being able to have expenses paid with PPP funds to be tax deductible. Is that a pretty expensive proposition to conform that in California?
We are still kicking the tires on that. We do have some estimates on that, but we are still researching that. So I would love a chance to come back to you guys on that, because it was in the provisions late in December at the federal level, and so we are looking at what the impacts of that conformity would be on state revenues.
Great. And I'm going to ask this as a final question. And I know not just talking to you, but other people in the administration are concerned about making sure that California continues to be a magnet for talent and for jobs. Do you sense that as a concern of the governor, and he wants to ensure that we keep the best jobs here?
Absolutely. And you will see, if you look at our budget, I would really turn to the higher education pages. There are a lot of emphasis on making sure that California has always been exceptional in many areas. So many advancements that were created here, so many different inventions as well. And that our higher education system is such a catalyst for that. So we've made some targeted investments to really continue to focus on that. Yes, absolutely. That's something that had many conversations with the governor about how do we keep all of that here. It's incredibly, we have an incredible economy, diverse, all different sectors, and we want to make sure that we're keeping those here and wanting people to invest for the long term here.
Great. Well, thank you, Keely, for so much. I
So
mean, there's
sorry that I
just a
was
lot
not
of
very
detail here.
succinct. I
No,
apologize.
no, it's, well,
There was a lot to cover.
there's a lot in that. And actually to that point, for one of the questions, exactly what you're talking about, linking higher education. Your budget's online and there's information online at the Department of Finance website, correct?
Right.
Yes.
So yeah, I would point you to our budget summary. It's not a slim read this year, but you know, it's separated different chapters. We do have an equitable and broad-based recovery chapter that gives the highlights of all of the pieces that I went through in more detail on job creation, which is you know, we still have over 4 million people that are on unemployment. We know that there have been innovations. Some of those jobs are not coming back. We want to make sure that we're focusing on retraining for the jobs that are going to be here. And we also want to create more jobs here in California, and the partnerships and the innovation and the enterprise of the private sector is what's going to get us going out of this pandemic. And so we really want to help foster that and help nudge that along. So,
Well, it's great for all of us who are watching to know that we have that voice in the administration. And thank you so much for Keely for being part of that and protecting the businesses out there and the taxpayers. So thanks for the presentation and you spending a good hour with us today.
yeah, no
so
problem. Sorry it was so long. Oh, like I usually try and go for more brevity, so I'm so sorry about that. But there was a lot.
No apologies. Thank you so much. Thanks everybody for watching.
Yeah, I'm happy to answer more questions, and you can reach me, and then I can get back to you, or have one of my colleagues get back to you.
And we can always coordinate those questions here, and I can pass them on to Keely. So thank you, and thanks for everybody to watching today. Appreciate it. Thank you. Great.